I also have Amit Shah joining in. He is a technical research analyst with the Indiabulls Ventures. Amit, what's your reading? Two questions here really. The kind of concentration that you've had from the large cap universe, is that what's going to drive action going forward from here as well? And of course, about 100 odd points away from fresh highs on the Nifty, how soon can we get there?
Right. Yeah. So definitely, as you say, it's definitely the large cap participation which has taken the index higher. So see, basically at 10,550 market did make a very strong base, while we saw in that phase that mid caps and small caps were correcting very sharply. But still, markets held its ground. 10,550 was sort of a base that it created, and see, basically what market has been doing is it's been trading in a very large range of 10,930 and 10,500, 10,400 on the downside. So this was the broader range that it was trading in. Now, since we have broken out of that range, in spite of all the headwinds, we talk of rupee, we talk of crude oil, whatever the headwinds that we talk of, but market has got its mind of its own, and it's wanting to break out in such a scenario. So bulls are full of confidence, I would say, and what we are looking is not just making up for new highs, but my sense is will dash towards 11,400, 11,500 zone in times to come.
All right, so 11,400, 11,500 definitely on the cards. May take a little while to get there, but we are looking at those levels seriously. We also had a word with Sunil Singhania, one of the biggest voices out there in the markets, on how he expects the next step of the rally to pan out, and of course, where is the investor interest at. Here's what he had to tell us.
Correction in mid caps and small caps is a reflection of a correction of that overvaluation rather than anything else. We don't expect this trade war to grow over into a full-fledged trade war. In fact, there are news articles that both US and China are willing to sit on the table and sort out. And so I think over the next 2 months, maybe is a good time to build a portfolio. Rather than consumer staples, we'll go in for consumer discretionary. Financials again will continue to be a great sector.
All right, that is as far as the market call goes. Let me also talk about Reliance Industries specifically. It's back in that $100 billion market cap club. This is the biggest percentage-wise intraday gain that we've seen on this counter in over a year. Last time you saw this kind of a move, excess of 5% on a Reliance Industries, was way back on 27th of February 2017. Valuation-wise, it's trading at about 14.5 times, but it is for the fifth straight session that you've seen a big move on the counter, and traders are lapping up the share. It's a 12% rally in the last 5 trading session on a Reliance. Exactly a week ago is when the AGM was, and those big announcements came in as far as Jio Fiber as well as Jio Phone 2.0 go. 17.5% YTD, 40% on a 1-year basis. So a big uptrend as far as Reliance Industries goes, and almost half of today's up move is purely coming from a Reliance. Amit, how important is the participation from Reliance as far as, of course, the index movement goes? And specifically, just give us the next levels to watch on a Reliance, because it's been claiming highs, it's been claiming milestones. It had a period of consolidation between 850 to 950, but now it's convincingly broken out of that. So where is it headed next?
Right. So see, Reliance has actually been the late entrant to the overall bull rally. So basically, if you look at the very long-term charts, it has actually consolidated for good 9 to 10 years, and has recently broken out into fresh life highs in the later part of 2017. I'm talking about the broader picture. So Reliance Industries has, I would say, started a phase of trending up, and this should continue for a long time to come. I wouldn't be even surprised to see if kind of 1500 kind of a target on Reliance. Of course, in the near term, from a trading perspective, it does look a bit stretched. Possible that you can get some 3-4% kind of profit booking, but any dips would be definitely buy on Reliance, and it is definitely heading towards much higher levels, and 1500 wouldn't surprise me going ahead on a positional basis.
That's a 40% rally that you can expect on a Reliance. So big bullish call coming in. A positional play, of course, may consolidate, may correct, but the trend is definitely positive for this one, back in the $100 billion market cap club. We spoke to Jal Irani as well as Sushil Choksi, one of the biggest voices to comment on this stock. Let's hear out what both of them had to say on the fundamentals of Reliance and, of course, how they feel about the counter and the road ahead for this one.
Fundamentally, the company is doing rather well, and in fact is poised to do much better. And at current crude prices, that project makes an ROE of more than 30%. Our thought is that earnings are going to grow overall by about 20% per annum or slightly more than that.
Petchem business is likely to show a handsome gain because all of the plants are more or less in operation or will stabilize for betterment in next 3 quarters, quarter on quarter. So combining petrochemical and refining and marketing business, the stellar performance of growth would be reasonable with incremental GRM as well as chemical business. So EBITDA should be in the vicinity for the quarter around 8,000 crore plus, and refining, which was around 6,500, should sustain around that. And possibly in the second half, refining would also look up, and petrochemical with the entire expansion being on stream also should look up.
Right, so those are the expert voices on Reliance Industries. You've also had a big ticket announcement on Reliance. Of course, they were in the running for Alok Industries and they have backed that. And now the letter of intent will be signed soon. They will submit a bank guarantee, and you expect the NCLT to give final clearances for Reliance Industries acquisition of Alok Industries in about a week from now. Chetan Bhutani, who's been tracking this one very closely, joins us with the exclusive details. Chetan, looks like Alok Industries is in the bag for a Reliance. What's the update you have for us?
Well, that's right, Banshu. Reliance Industries Limited is all set to back Alok Industries. Remember, the banks have to take a very deep haircut on Alok Industries. Remember, Reliance Industries Limited was the sole bidder with JM Financial ARC for Alok Industries. Reliance Industries Limited, JM Financial ARC, as what sources are telling us, has signed the letter of intent for Alok Industries. Reliance Industries Limited, JM Financial ARC has also submitted a 100 crore bank guarantee to the State Bank of India, which has a maximum exposure to Alok Industries. The final approval from NCLT Ahmedabad is expected on July 17th. Remember, the resolution professional has submitted the resolution plan submitted by by Reliance Industries Limited to NCLT Ahmedabad in a sealed cover. And Reliance Industries Limited, JM Financial ARC bid stands at 5,050 crore rupees, nearly 82% haircut for lenders. That's what indications are right now. Well, the RP has also submitted the bid to NCLT Ahmedabad for approval. The total outstanding debt stands at about 29,000 crore rupees, and of course the key lenders include State Bank of India, of course, Axis Bank and Central Bank. Remember, 72.19% creditors gave not in fresh voting round as per the directions of NCLT Ahmedabad when the bid was rejected in the first round. Remember, the first bid got 70% voting and it got rejected because the 75% mark was the key threshold. But when the second IBC amendment came into picture, 66% was the voting threshold. So henceforth, the 72% voting gave mark to Alok Industries' resolution plan going through.
All right, that is on Alok Industries. Lenders have given their nod. It will be a big haircut, but one more resolution in the bag as far as NCLT cases are concerned. Even as we were telling you that RBI is now ready with its next list, 30 more NPAs are likely to be referred to the NCLT. We'll take a very quick break. We will come back and discuss some more buzzing stocks with Amit, get some trading ideas from him as well, analyze a couple of other big exclusives that BTVi has for you. All of that and more coming back in 2 minutes.
For a secure tomorrow, you need to prepare today. Take control of your investments and make the most of the markets. And we give you that power through information, insight, and intelligence on how to tackle the markets. Tomorrow's Bets, Monday to Thursday at 4 p.m. only on Business Television India.
For over 140 years, we have partnered India's growth story, a journey that was synonymous with noise and cacophony. is today silent, yet more dynamic. Technology now runs one of the fastest exchanges in the world. BSE, experience the new.
F&O Spotlight, weekdays at 10:30 a.m. Only on Business Television India.
Welcome back to the trading day. The Nifty is still at that 11,035 mark or thereabouts. We're still trading with gains about 0.8%, but well off day's high, like you can see there on your screen. Bank Nifty 2 holding on quite well. Amit, good afternoon. Let's get some trading ideas then. At these levels, where are you seeing good opportunities?
Yeah. Sure. So, see, mid-cap IT and IT in general has been the theme. We have been pitching the IT theme to clients for some time now. I think emphasis is a very good. It has got an excellent base for itself on all time frames. If you see from the very, very long term to even the near term, charts are excellent. The sector is doing well. Emphasis is looking poised for much higher levels. One can look to buy emphasis from a near-term perspective for targets of about 1230 to 1240 in the near term. So yes, emphasis is looking strong on the charts.
All right, so that's an emphasis that's looking quite strong on the charts. In fact, we've seen a very, very strong move coming in the last year as well for an emphasis. Talking about these IT stocks, and obviously considering the rally that we saw yesterday, Amit, we are seeing quite a bit of pressure for some of them, TCS for example. But what are the levels that you're watching out for, especially as we talk about an Infosys ahead of its numbers?
One moment. See, Infosys has also made a fresh all-time highs for itself, and recently, see, it's been kind of holding around its 20 EMA on the charts. So only a close below 1285 kind of a level would say that yes, something. But yes, the result could be the trigger for it. But as of now, the trend is up. It's holding on to its key support zones. So things are looking broadly positive for the IT sector. We never know what result and what short-term result could trigger a temporary move, but the charts itself suggest that the stock is definitely strong. The stocks that make lifetime highs and then hold on to their near-term supports are always on the stronger side.
Right. So Infosys is of course the next big one on our radar with its earnings coming in tomorrow. Watch out for that one. A little soft in trade today. In fact, large cap IT is taking a bit of a breather after the kind of moves it has had. The traction today, Amit, clearly seems to be with some of the banking names and some of the NBFCs. Let me start with the two big NBFCs here. In fact, let me ask a couple of mid-cap ones as well. Talk to us about Bajaj Finserv and Bajaj Finance. Where is the traction higher, or both of these stocks, are they looking good for an up move? We had seen M&M Finance, which was participating for a while. It's cooled off a little, but LIC Housing Finance has been doing well of late. Do you see a trade in these names as well?
Sure. Yeah, in fact, last time I was on your show, we did speak about both Bajaj Finance and Bajaj, the bigger, both the twins, that they are likely to do well. They have done well, in fact, and even from here also, the trend is very good. See, these are very, very, strong stocks. You don't see much of, sharper corrections coming into the stocks. So these are a set of stable stocks. They correct on a very small percentage basis, and they rise much more than they give up. So these are the strong trending stocks which you should be looking to hold on to. And yes, I see much further levels going ahead. And yes, I mean, see, basically Bank Nifty is the biggest component for the Nifty. So if Nifty has to move, banking will have to participate. And anyway, in the last bounce from 9950, from where Nifty bounced to levels of 10,930, actually Bank Nifty outperformed the Nifty significantly. So I see that trend continuing, and the banking space, the financials should overall do well in this phase. You are seeing the Yes Bank, then a lot of private banks, doing well. So yes, there is attraction, strong buying, strong flows are coming into the sector, and yes, this sector is looking good.
In fact, let me ask you about the HDFC twins also, Amit. HDFC Bank, of course, hitting fresh life highs in trade today. It's cooled off slightly from those levels, but still we're in positive territory, and it had been taking a bit of a breather, some consolidation for a few sessions in the week on by. HDFC as well, if you can come in on that one, because of the sort of traction that we're seeing today for banks and financials.
Sure. So see, the HDFC has formed a nice base for itself around 1700 levels, and now it is actually showing early signs of breaking out to all-time highs above 1980 levels. My sense is that should be just a matter of time that it breaks out to new highs. See, we will keep getting reasons for markets to make new highs in this phase, and some of these larger heavyweights are already showing signs. So I wouldn't be surprised for an HDFC to go towards level of 2200 plus once it breaks out about its lifetime highs. So yeah, I mean, HDFC is looking good. One second. Comment on HDFC Bank.
We'll just wait for Amit to get his HDFC Bank chart. As he does that, let me just pull up some of the mid-cap IT counters. Amit was talking about Emphasis as one of his picks, but across the mid-cap IT space, you are seeing a lot of traction right now. Pull up Hexaware spiking up, pull up Mindtree, pull up KPIT Technologies. All of these stocks are seeing a spike over there. There you go, vertical spikes coming in across these names right now. So clearly buying interest coming back to mid-cap IT. Emphasis is up 2%, but Hexaware, KPIT, Mindtree are a few of the names that are doing well in trade right now. Sonata Software pulled that one up as well. That too is seeing a big spike in trade as well. It's a 10% gain that you have on that counter right now too. Meanwhile, some more news flashing on your screen. This is to do with an extradition in the Purulia arms drop case. Kim Devi will be extradited to India. Denmark has agreed to that. The extradition is coming after an agreement between two nations on human rights concerns. Kim Devi will not be taken into custody while being questioned in India. He will be interrogated in Delhi in the presence of Danish officials. The development follows Denmark's acceptance of India's request for extradition, and a CBI team will travel to Copenhagen next month to discuss the modalities of this. So a diplomatic win coming in for the country, securing the extradition of Kim Devi in the Purulia arms drops case. Meanwhile, just getting back to some of those mid-cap IT names that are clearly the flavor of this last hour of trade. A lot of traction coming in across this universe. I know you mentioned an Emphasis, Amit, but I really want to ask you about especially something like Hexaware. If you remember last week, there was a vertical rally that we saw in one of the trading sessions. It was a 22% jump in a single trading day on a Hexaware. Since then, it's been holding on and now seeing another spike. Where can this chart go next?
Yeah. So see, basically Hexaware had broken out, and in fact we had an in-house call for Hexaware as well, and we luckily caught this big move for Hexaware. More or less, the short-term target for Hexaware seems to have done. The broader trend still remains on the bullish side, but see, this is a large theme. Mid-cap IT is a good theme. It's a late entry into the move, and this segment did not not move back in 2017 when all other mid caps, small caps were moving. This is a new sector which is being discovered by the market, and my sense is this outperformance is likely to continue. Even if market does not do well, this space is likely to do well. One can even look at Take Solutions as an short-term and medium-term trading idea. It's trading at about 243 right now as we speak, and one can definitely see higher levels, like 265, 270 coming into the stock in the short term.
All right, so some of the other mid-cap IT counters too that should be on your radar in trade. We'll take a very quick break. We will come back, continue to discuss some more buzzing stocks. Also on an IDBI Bank, more exclusive details that BTVi is picking up, including IDBI's efforts to clean up its book ahead of that takeover from LIC. We'll be back in 2 minutes with more details on that.
Welcome back. You're watching the Trading Day. We've been talking about these IT stocks, Amit. Let's talk about an Hcl Tech. Of course, the big trigger is that the board is meeting today, and on the cards is a buyback. Remember, this will be the biggest IT company to consider a buyback after TCS, and that was a trigger that really sent that stock to new highs. We'll have to watch how an Hcl Tech also reacts on the back of that as well. Just comment specifically on an Hcl Tech first, Amit. How is this looking to you?
I would say within the space, Hcl Tech has been a little bit of laggard while other large caps and the entire mid cap sector is moving. So I'm not very positive on Hcl Tech because it's more of a sideways trend for the stock within, of course, the large uptrend. But as of now, it's quite sideways and it's not showing relative strength as the other TCS and the entire other IT, mid-cap IT is showing. So I wouldn't be too positive on Hcl Tech.
All right, other opportunities looking better as far as the IT space goes. Well, let's talk about another big exclusive that we've been bringing you today, and this is with regard to IDBI Bank really cleaning up its books ahead of that takeover from LIC. In fact, we're picking up exclusively that the bank is looking to put a large quantum of NPAs on sale. Now, this is something that the bank had already announced at its fourth quarter earnings. They had said that they're looking to sell a quantum of about 21,800 crore worth of NPAs, and now we are learning that 15,000 odd crores of that will be sold, or at least the bank plans to put them on sale ahead of the takeover in late August or September. We have Meghna Mittal joining in with those exclusive details. Meghna, take us through what you are picking up here.
Ahead of the acquisition of IDBI Bank by LIC, what our sources have told us that IDBI could be looking at clearing its books. Remember, IDBI Bank has NPAs worth 40,000 crore on its balance sheet. Out of that, it could be looking at selling approximately 15,000 crore NPAs. So this is a major breakthrough, because then probably the remaining debt will probably become sustainable for the IDBI Bank. It will move towards recovery and clearing its books. Now, remember, LIC, IDBI acquisition, LIC is already looking at picking up 51% stake in IDBI Bank. It has got approval from IRDA. It will be the initial 39% probably will be through preferential issue, and later LIC will be coming out with an open offer also to preserve the interests of the minority stakeholders. LIC will have to spend approximately 11,000 crore to pick up the additional stake to reach 51% stake. But also IDBI has rupees 7,000 crore worth of real estate. So probably the deal is not that bad a deal. It will probably work for turnaround of IDBI Bank, and also because LIC has been wanting to acquire a bank for quite some time. So all in all, IDBI Bank before the acquisition could look at clearing its books and selling approximately rupees 15,000 crore of NPAs. That's what we are picking up from our sources.
All right, Meghna, thanks so much for bringing us those exclusive details. We'll, of course, keep bringing you updates ahead of that big takeover by LIC of IDBI Bank, cleaning up their books, and this perhaps might play into the valuations as well once we get the fine print of how the takeover and the contours of that will play out. In fact, BTVi had brought you this news first on the 25th of May of this year. Soon after their fourth quarter numbers were announced, MK Jain, the then MD and CEO of IDBI Bank, and currently, of course, he's the Deputy Governor at the Reserve Bank of India. He had told BTVi that the bank is looking to sell over 21,000 crore worth of NPAs when the opportunity arises. Listen into those comments.
Around 21,800 crore of the assets NPL book we have identified to put out on sale, and if that also happened, the sale concluded, there will be a drastic reduction in gross NPA during the financial year. Recovery and upgrades, we have improved a lot on our system, on our processes, as well as the structure, and last financial year also there was an improvement in recovery and upgrade. This financial year also there will be substantial improvement in recovery.
All right, so that was MK Jain talking about these plans to offload quite a large book, or in fact the largest that has been announced by any of these PSU banks as they go to put NPAs up for sale. In fact, let's bring in Shaina Mukaddam as well to get a sense of what you're making, Shaina, of these kind of the big updates we've been getting for an LIC as well as an IDBI bank. What is the sense that you have at the moment, at least of what we know of the deal? We know that LIC has got approval from the IRDAI, RBI input still unclear as yet, but overall, do you think this is good news because the stock of IDBI Bank is only going up?
I think it is very good news because, and also I think that the government has no other option. So really speaking, this deal has to go through, come what may. So I think when it goes through and as it goes through, which we are expecting it will be a big positive, because the major problem for IDBI is that it is totally run out of funds. It needs to be recapitalized, and I think LIC is a very strong hand, and it's going to be a minuscule part of their overall balance sheet. So it is one sort of M&A which is going to have no impact on the PSU company which is taking it over per se, but the change that will happen on the IDBI balance sheet will be tremendous. And even after the open offer, which I think is the expectation which is driving the stock price, and I go with it, I think there has to be an open offer. Once that happens, I think once IDBI has got a major chunk of, LIC has a major chunk of IDBI, at a later stage when the whole balance sheet is cleaned up, once the issues of the large, stressed assets is resolved, definitely the government can again look at divesting some part of it. So I think it's a win-win for everybody, and this deal should go through.
Win-win for everybody, deal should go through. Meanwhile, pull up a Karnataka Bank, because those numbers are now flashing at the bottom of your screen. Is a spike that you're seeing in Karnataka Bank, 7% up on that counter. Just looking at the numbers, there is an improvement on the asset quality front, marginal improvement. Gross NPAs coming at 4.72% and net NPAs coming in at 2.92%. Provisions have gone marginally higher as well, but on the bottom line front, there has been a significant improvement, coming in at 163 odd crores over there versus a comparable figure of 133.9. Net interest income is at 469 crores versus 424 crores. So good show there from a Karnataka Bank.
In fact, the profit number is most significant because while year on year it's an uptick from that 133 number, last quarter Karnataka Bank had reported a profit figure of 11 crores. So coming in at 163 crores shows that things seem to be back on track as far as the Karnataka Bank goes. Of course, it's much lower. It's about half the historic number that a profit that Karnataka Bank would normally post, but a big jump from that 11 crore profit number that they had posted last time around. So that could be, the main reason that we're seeing that kind of a jump. And of course, the asset quality numbers are the other things to watch. Slight downtick coming in on a quarter-on-quarter basis for the gross NPA, coming in at 4.72%, and net NPA is at 2.92%, almost completely flat if we talk about a Karnataka Bank on a quarter-on-quarter basis as well. But Shaina, any view that you have on a Karnataka Bank? Is this a bank that you've been tracking closely? Of course, one of the smaller ones, but perhaps also more shielded from the sort of corporate loan problems that the other banks are facing.
Yes, to an extent it has, but I think if you look at it over a track record of 3-4 years, it's been, you know, very range bound. It's not giving you the sort of multiple returns that other private sector banks have given. So a lot of long term large investors have really got disappointed with it. At the same time, it's a smaller bank. M&A activity in the long term future can happen, and the huge dip that we saw in the, you know, in the stock price after the very disappointing fourth quarter numbers, where they reported just 11 crores because of huge write-offs and provisions. I think it is now sort of clawing its way back into a better number. Of course, the base last year in June was, I think, about 133 crores. So on a base, it's not looking that great a number, but on a Q-on-Q basis, it's looking very attractive. I think it will bottom out from current levels and could bounce to the 135, 140 type of levels that it was earlier, like I think 3 or 4 months earlier.
All right, so definitely Karnataka Bank, a stock to watch out for. Significant improvement in its performance vertex, like Nibrata said, 22% on a YOY basis, but otherwise there is an even bigger jump on the bottom line if you look at a sequential comparison. We'll head into a very short break over here. As we head into that break, let's also hear out some comments from our market guru of the day, Manish Sonthalia of Motilal Oswal AMC. He's talking about markets, he's talking about Reliance Industries and some of the other stocks he likes, especially from the consumption basket. We'll hear that out and we'll be back after a short break.
So the refining and the petchem business is doing quite well. So there is no doubt about it that these are cash flow machines for the company. What are cash guzzlers are the retailing and the telecom businesses, and they are trying to gather market share through very differentiated pricing and predatory pricing so as to acquire a lot of customers. They have the balance sheet strength as opposed to competition, which does not have that strong a balance sheet per se. So from that point of view, they have an advantage. How far they can go in this needs to be seen. So undoubtedly, their flagship businesses of refining and petchem are firing on all cylinders. Petcoke gasification will add a bit to the EBITDA because of higher oil prices. The petcoke gasification will really not have too much of significance if oil prices were to correct significantly. But given that we are at $70 on the Brent, it does make significant addition to the EBITDA. But how far does the retailing business go in terms of profitability and actual profits made? It's very easy to get the top line. That's par the course. But how profitable do the rest of the businesses, visualizing your retailing and your telecom, how much of a cash do they consume, will really determine where does the stock price go. Yes, the stock price has crossed $100 billion, but let's keep our fingers crossed and see whether it can build up from these levels.
Manish, I have a question here, and I just want to actually go to another sphere. Now, retail is another sector where we all have seen different companies in different geographies again basically doing good, seeing good volume growth. D-Mart again in the western part of India, again also V-Mart in northern part of India. Every company has a different business model, their own modes, their own competitive advantages here. Looking at Reliance retail business, and why I'm talking about that business, because that business has been building revenue growth very quickly. Second, in the effort to integrate through online, through geo, through more footfalls, perhaps what's the vision, what's the sort of outlook you're looking for the business over the next couple of years or many quarters? Is this something you're keeping your eyes very closely for earnings growth contribution also?
Yes, sir. Currently, we are not building too much for the next 1 to 2 years. Both these businesses, of course, they are picking up top line quite rapidly, but in terms of profitability, there's still a long way to go, I would believe. Organized retailing will do quite well because we are now $2.5 trillion economy, per capita income closer to $1,800. And obviously, once an economy hits that sort of a per capita income, consumption tends to get a boost, and that would indirectly benefit all organized retailers. I mean, Reliance Industries is also going to benefit out of it. There's no doubt about it.
Manisha, we were earlier talking about retail here, and I wanted to ask you one question here. Now, I was just looking at the stats here, and the stats actually are looking quite interesting, and that's where this question is coming from. D-Mart, again, if I'm looking at the metrics, almost is trading at 4 to 5 times. Next 12 months of sales there, so price to sales is roughly 4 to 5 times. That's where the market cap is standing right now. V-Mart, a smaller stock, but still trading at 3 to 4 times next 12 months sales there. Looking at Reliance Retail, annualized sales is roughly 1 lakh crores. So 25,000 crores last quarter. So again, you can analyze that again, basically roughly 1 lakh crore sales here. What's the sort of valuation in terms of growth perhaps we could be expecting on a sort of sum of parts basis? So Reliance Retail perhaps, what's the contribution perhaps you could be expecting in terms of size of the business growing and versus peer comparison, where at present the entire retail business perhaps could be positioned here?
So the best way to value retailing businesses on profits. It's a function of P multiples as opposed to, let's say, the number of times of sales. I mean, I wouldn't value retailing businesses as multiple of sales. I would rather value it on multiple of profits. The fact remains that D-Mart and V-Mart are highly profit-making companies. Not to say that the entire retailing space will see some heightened growth. So you could see 30, 40, 50% sort of a growth in turnover and operating leverage playing out and commensurate increase in profits. So that's the way to go forward. I don't know in terms of Reliance what sort of metrics one should use, because profitability is anemic, but definitely once they achieve a certain traction, they get a certain traction in turnover, this is also going to see some massive increase in operating leverage translating into hyper growth in the profits. So from that point of view, yes, Reliance Retail is also going to benefit out of the organized retailing boom that we are going to see in the country.
Welcome back. You're watching the trading day. The Nifty has slipped, of course, from those highs. We're still trading with gains of about 0.6% as far as the Nifty goes. Bank Nifty outperforming at the moment, 0.7% up on the Bank Nifty. Only about 3 counters trading in negative territory, and those are the mid-cap private banks that are seeing a bit of pressure. But Amit, let's talk about these crude-exposed stocks, specifically the airline stocks to begin with. Jet Airways has been seeing a good run throughout. Interglobe Aviation is trading, I think, at day's high at the moment. What are you making of the moves that we're seeing on all 3 aviation stocks? Any preferences between the 3?
Yeah, so if I talk, though I don't like this sector in the near term, but if you talk about within the sector, then yes, Indigo is looking a bit better compared to the Jet Airways, So yeah, Indigo can have some pullback rally. It's been taking support near its 200 weekly moving average on a consistent basis. So yes, some bounce can develop towards levels of 1200 to 1210. So yes, a relief rally is possible. Jet Airways on the other side is it's been one of the big laggards and have had very, very sharp downside. So while yes, the downside may be arrested for a while now, but I mean even on a day like today's, it's still closing way off its highs. So not much of strength going in for the stock. So I think it's an avoid for now.
Avoid for now. Shaina, is there a fundamental case for aviation stocks? I mean, this is a seasonally lean period for them. Fare wars are back. You have high discounting that's on. Growth continues to be strong, but after many, many months, it's fallen below the 20% mark. I mean, that's still a high base that we're talking about. But nonetheless, fundamentally, is there a case to bet on aviation?
Well, I think one can, because there are a couple of things that may work in favor of aviation. One is if you see the last quarter numbers, like take Interglobe, which seems to have the strongest balance sheet in the space. So if one was to pick and talk about a stock, it probably would be Interglobe. And it was hit by complete negative news in terms of its top management, in terms of its numbers, etc. So that I think is likely to change over the next couple of quarters, 1 year. I think yields are likely to improve, and over and above that, if at all the government was to impose GST on ATF, I think that would be a big positive, because as we all know that fuel is a large component of the cost, and the set off that the companies will get, especially I would say Interglobe, would be quite a big of chunk that could flow down to its P&L. So I think one can look, and plus, to the last point being, it's shown a very strong support at about the 1000 levels, despite all the negative news. So I think at current levels, if one is taking a bet, one can take a bet on Interglobe with a 3 to 6 month view.
All right. In fact, Shaina, if you're positive on aviation or select aviation stocks, what is the view that you have on paint, tire stocks? Because of the run-up we've seen in crude so far, we have seen on and off pressure come into these stocks. Now that it seems to be stabilizing, perhaps some good news as we go into the end of the year. Do you have a positive outlook for this space?
Yeah, I think I would look at these sectors more consumer driven. So Asian Paints, I would pick it up more to do because of the market size that it has and the potential because of the demand pull that will come in with increased, the thrust on housing. And to an extent, I do believe that while they have not been able to, or they have absorbed some of the increased costs on the increase in raw materials, they have stabilized, and it is likely that they will be able to pass it on incrementally going forward. So I would pick up these stocks like Asian Paints, Berger Paints at dips. I think this market is giving us nice dips to pick up these long-term stories. And also same thing with tires. I think the similar story is playing out with tires. So tires have had a good year last year. I think it is consolidating, but this is giving us an opportunity to pick it up at dips. So these sectors will see some margin contraction with higher crude oil prices, but I would be buying it at dips with a real long-term view.
In the real long-term view, maybe good idea to get into some of these auto names. The battery stocks are a little quiet in trade today, but of course Exide and Amara Raja have been buzzing as well. Keep an eye out on that. Amit, on frontline auto names, I'm going to throw 3 names at you and let me know which one you like best, because these 3 have been gaining the most and have seen highest traction in the last few sessions. Maruti, of course, good gains on that one. Bajaj Auto and an M&M.
Yeah. Both I would say M&M, both M's I would say, M for Maruti and M for M&M. I would say both are looking good on charts. Maruti has actually completed its long multi-month consolidation. Of course, in the near term it has run up, so it could give off some maybe 3 to 5%, maybe along with some profit booking in the market itself. So, but broadly, yes, Maruti is looking good. Definitely, it should make all-time fresh highs above the levels of 9996, which is almost 10,000. So yeah, I mean it should definitely breach those levels and head even higher. So Maruti is one stock that within the auto space I like. M&M, of course, M&M also is has made a nice base for itself, is making good trending action. So yeah, I mean last time also while I was on the show, we spoke about the M&M. So yeah, I mean I continue to hold a positive view on M&M as well.
All right, positive on both the M's, the Maruti as well as an M&M. A bit of some profit booking coming into these auto stocks today, but they've seen strong moves recently, especially the likes of Bajaj Auto. Amit, I know we keep coming back to IT, but if you take a look at the Wipro chart, we're seeing very good traction coming into this one. In fact, I think we're trading near about a day's high, and this is ahead of course, Infosys is earnings tomorrow. What is Wipro looking like to you on the charts?
Sure. Wipro in the near term, it does look like some sort of trading pullback can come, and it can head towards levels of about 300, 305. But even I mean beyond that, this is more in similar lines with Hcl Tech. Like this has been a laggard within the IT space, and it's more of a sideways trend for quite some time. So not much of an strong buying interest coming in for Wipro. So yes, apart from the trading bounce, I am not gung-ho on Wipro.
Not gung-ho on Wipro at this point in time. In fact, some cooling off coming in on the index. You have the Nifty now at 11,015 mark, so about 25-30 odd points down from where we started the show. You have of course Reliance Industries that is contributing to 37 points of that 67 point up move that you have on the index. But point wise, where is the pressure coming in on the street right now? Infosys is the weakest link ahead of its numbers. That stock is a top point wise contributor to some kind of a cooling off on the Nifty right now, contributing 12 points on the lower side. M&M down about 4 points. Vedanta continues to languish. You've had a minor pullback in the stock, but otherwise it's weak. TCS, after that big 5% surge in trade yesterday, is also cooling off slightly. So IT stocks, barring an Hcl Tech on the large cap universe, are a little quiet in trade, even as mid cap IT continues to see some buying traction. UPL is very weak in trade today, down 4% on that counter. You have profit booking, like Nibrata said, on the auto names, Maruti, Hero, Bajaj. All of these stocks are a little cool in trade right now. You have a correction also coming in on a Lupin, a Z Entertainment, and Axis Bank, which was buzzing in trade yesterday. Hindalco had seen a bit of a revival, and Tata Steel. But all of these stocks are a little quiet in trade right now as well. Final words, Amit, in terms of any other stocks that you have picked up that could be good BTST or STBT ideas before we wind down today's trading session?
Yeah, so one can look at DHFL as a BTST. It could show some up move in the short term. So yes, BTST as DHFL, and even emphasis also even with the 1 or 2 days perspective, also one can even consider that stock as a BTST as well.
All right, that is on an emphasis which Amit had also highlighted for us at the start of the trade, closing out at the highs of the day on an emphasis with gains of about 3%. So good gains coming in on that counter. Amit, we'll leave it at that. Thanks so much for joining in today. Just about 90 seconds to go for market closing. Sonata Software, just as we were talking about some of these IT stocks, a smaller name there, but look at the surge on that counter, 14.5% on a Sonata Software right now. Keep this one on your radar. Balrampur, GMR, Interglobe and GVK are some of the other